Okay, chapter 20, this is it. You're almost finished. Chapter 20 is all about closing entries, which you already know how to do because we did that in chapter 10, so it shouldn't be that different for you. Some of it should seem quite familiar. Here's the demo problem. As I state here in the demo problem, the purpose of closing entries is to give all the temporary accounts a zero balance. So remember, your assets, your liability, and your equity are your permanent accounts. So if you're looking and thinking about a worksheet, that would be from cash down to retained earnings. Those are your permanent accounts. And then everything else is temporary. So anything on the income statement portion of the worksheet is or are your temporary accounts. So those have to be zeroed out, given a zero balance before we start our new fiscal period. So remember to give something a zero balance. So if you're thinking of like sales that has a normal credit balance, so if it has a $10,000 credit balance, to close it out, you would have to do a $10,000 debit balance. So you're just doing the opposite of what the normal balances are. So here are the steps. First, you're going to close out everything on the income statement that has a credit balance. Second, everything that has a debit balance. Third, you're going to close out income summary because we're using that to dump the first two in. And then the last thing is to post. So if this were a portion, the income statement portion of the worksheet, and you've got sales, purchase discounts, purchase returns and allowance in the credit column, sales discount, sales returns and allowance, purchases, transportation in, and then your expenses in the debit column. Now, of course, you know, usually there's more than these as far as expenses go, definitely. And then this is the last part of the income statement where we determine the net income and then get the two to equal. So the first step is to close out anything on the income statement portion that has a credit balance. So that's sales, purchases, discount, purchase, returns, allowance. And as I said, they have a normal credit balance, so to close them out, we have to debit it. So you're going to go down to your journal, write the words closing, or type the words closing entries in the description column. We're using June 30th. That's the end of our fiscal period here. You're going to write these three: sales, purchase discounts, purchase returns and allowance, as debits because up here they're credits, so here they have to be debits. And then we're going to add those three together and we're going to credit income summary because these get dumped into income summary. So remember, income summary can be whatever we need it to be, a debit, a credit, whatever. It doesn't have a normal balance. Then we're going to do the debits. So we have all of these debits. So to close them out, you do the opposite. So we're going to credit them. So we're going to credit each one of these, and because we're crediting each one of these, we have to debit income summary. So the first transaction always looks like this, in that these are debited and income summary should be a credit. And on the second transaction, income summary should always be a debit because you're going to credit each one of these. So you add all of these together, and that's how you come up with your amount for income summary. The last step is to then close out income summary. So in order to do this, just like we did before, you're going to use the amount of either your net income or net loss. This one happened to be a net income of 11,270. So if it is a net income, you are going to debit income summary for 11,270, and you're going to credit retained earnings for the same amount, the amount of your net income. If it were a net loss, these would be reversed. You would be debiting retained earnings and crediting income summary. But a net income looks like this. The posting to this, so I just have the sales discount account here that had a normal, let's see, where is sales discount? We had a credit of 150. Oops, hold on, should be, yeah, normal balance of 150 credit. So we're going to debit it. So if I were posting just this one, of course you would post all of these, but just to give you an example. So we would go to sales discount, put in the date of the 30th. You would write closing entry in the description column. You would put in your post reference, whatever it might be. I don't know. I'm just making it up. Here we have $150 credit. So you would put 150 in the credit column. You had a debit of 150. You're putting in a credit of 150. Therefore, your balance is 0. And then you would go back and take the account number 405. Don't forget to do that. And put it into your post reference column. And that's all that there is to this chapter. So I'm probably going to give you about 3 assignments. The first 2 assignments are pretty short and sweet. They're basically just doing this part of it. There's no worksheet to do. There's nothing to do except this part. So where I've been giving you about a week to finish an assignment, the first 2, I'm not going to give you as much time. The last assignment is going to take a little longer because it's from a worksheet all the way through. So that one I will give you, a little bit longer to finish that one. But as far as the first 2, stay on top of it because you're not going to get as long as you have been getting. And that's it. Bye, guys. Talk to you later.